Picture a nation with immense potential yet staggering vulnerabilities. Iran stands as a paradox in the global economy. Boasting the world's third-largest oil reserves and second-largest natural gas reserves, it holds unparalleled energy wealth, rivaling Venezuela and Saudi Arabia. Its strategic location, with a lengthy coastline along bustling trade routes and a central position between Europe's established markets and Asia's rising economies, offers a prime opportunity for commerce. Across the Persian Gulf, neighbors like Qatar, Bahrain, the UAE, Yemen, and Saudi Arabia thrive on oil riches, boasting a GDP per capita 10 times Iran's, masking their own issues with wealth. Yet, despite these advantages, Iran teeters on the edge of economic collapse, its prosperity undermined by over-reliance on oil and gas exports, a volatile, exploitable industry. Compounding this, 45 years of sanctions have crippled its ability to sell its resources, defining its economy through isolation. This vulnerability escalated recently with U.S. strikes on suspected nuclear sites, an escalation tied to its rivalry with Israel, a regional foe. However, this video, planned before those events, focuses not on speculation but on Iran's deeper economic plight, a saga of untapped potential and self-inflicted wounds. Iran's ideal geography and resources should ensure prosperity, yet sanctions and internal mismanagement hinder progress. Its leaders, wary of losing power, resist reforms, trapping the nation in a cycle of stagnation despite a well-educated populace and industrial capacity for cars, ships, and advanced tech. Iran's energy abundance, easily extractable fossil fuels, could fuel growth, piped to China or shipped via busy routes. Neighbors diversify revenues or invest globally, but Iran struggles. Its infrastructure, aging and mismanaged, causes blackouts despite vast gas reserves, worsened by sanctions blocking modern equipment. Global grid strain from renewables and AI adds pressure, yet Iran's subsidized energy fuels inefficiencies, like cryptocurrency mining, blamed for outages over corruption. Energy inefficiency is stark. Iran uses more per capita than Denmark but produces a fraction of the output, even with adjusted purchasing power. Refining woes persist. Past imports shifted to domestic capacity post-2010 sanctions, but poor quality gasoline harms engines and air quality. Subsidies keep fuel at 5 cents per liter, officially 70 cents, sparking a black market smuggling fuel at a 2,000% markup. Sanctions, enforced by U.S. dominance over global finance, deter trade, benefiting smugglers and China with cheap oil. OPEC offers leverage, but internal rivalries limit its use. Leadership clings to subsidies, risking unrest, as high unemployment, inflation, and brain drain loom. With an aging population and low birth rates, Iran's economic challenges deepen, resistant to change from a rigid, tradition-bound leadership blending industry, theocracy, and governance. Adding to this complexity, Iran's currency crisis amplifies its woes. Inflation, driven by sanctions and limited trade, has eroded the rial's value, with the black market exchange rate soaring 20 times above the official rate. This devalues subsidies further, fueling smuggling and reducing living standards. Regional tensions, including proxy conflicts, strain resources, while domestic unrest grows over economic hardship. Despite potential for energy exports to stabilize the region, Iran's isolation persists. Leadership faces a dilemma. Reform risks power loss, yet inaction deepens decline. As of July 21, 2025, this economic deadlock remains unresolved, shaping Iran's uncertain future.